Hey, Carrie. Well, we got a lot of trends on a collision course right now. So follow along with me while I throw out some numbers. The fourth quarter GDP growth was about 2.8%, which is a little below target, but still, completely acceptable in light of what has come before during this recovery. But if you look a little deeper, you see that it's mostly due to the savings rate going down. In other words, people are maxing out their credit cards to buy stuff, and that is temporarily boosting the economy. But if you subtract that out, in other words, if you assume that the savings rate didn't change in the fourth quarter and that people didn't borrow all that money, GDP growth was less than 1%. It was like 0.8%, which is trending towards recession when it drops from last year's level to 0.8%. And at the same time that's happening, interest rates are really jumping. The 10-year Treasury yield is up a full percentage point from its 2016 low, which means that the interest carrying cost on all the debts that we're taking on right now at pretty much every level of society. Most debts are variable rate in some way. Either it's short-term and it has to be rolled over, or it is connected to some kind of a reference rate, which is frequently the 10-year Treasury yield. That means interest costs go up when interest rates go up. And we're seeing that pretty much everywhere in the U.S. economy right now. And that's interesting because at the same time we're borrowing all this money, the cost of carrying that new debt is going way up, which means there's a limit to this process. We can't keep borrowing if the savings rate is already at a 10-year low, and we can't carry our debts if the interest rate on those debts keeps going up and up and up. At the same time, we don't have any savings left with which to manage our debts. So that is something that can't continue. Those trends cannot continue for too much longer because they cancel each other out. One becomes a limiting factor on the other, and then everything stops. Which means the economy is going to have trouble growing next year unless something else big happens. So then the question is, what will keep things going? If consumers can't continue to borrow and interest rates are high enough to make debts onerous for everybody else, where do we get growth? And, it's not clear right now. As you mentioned, the tax cut puts a little bit more money in the pockets of the 1%, basically. But those guys already, have record incomes. So it's not clear that corporations as a group are going to start borrowing and spending more in the year ahead because corporate debt is already at record levels. So some companies are announcing positive things where they're giving bonuses to people or they're building new factories and stuff like that. So that's a somewhat of a positive going forward. But remember, the government is borrowing that money and then giving it to corporations who are doing things with it. So it's in effect kind of an infrastructure program that the government is implementing via tax cuts. Since it's borrowed money to begin with, then you have to wonder what the government's finances look like as its interest costs go up. Because remember, it's rolling a lot of short-term debt over now. And as short-term interest rates go up, the government's interest costs go up. It's also borrowing at the long end of the spectrum as well. We're going to run a $1 trillion deficit this year, it looks like. And that's only going to increase with tax cuts and rising military spending and the new infrastructure program that the government is talking about now. We're going to borrow $1 trillion a year for the next 10 years, but we're going to be borrowing it at higher and higher interest rates while we're rolling over a lot of old debt at higher and higher rates. So the government's interest costs are going to go up in ways that may not be apparent now to people. And that's kind of a vicious cycle when you're borrowing more and more money and the cost of that borrowing is going up, which raises your future borrowing because you've got to pay more for your existing debt, and that you have to borrow for if you're already running a deficit. So we're finally entering the early stages of the dollar collapse story death spiral. It doesn't mean that it's necessarily going to continue into that death spiral, but this is what the early stage of that process looks like. So it'll be really interesting to see what the catalysts are for growth in the year ahead, if any.
Yeah. Yeah, well, we've been talking about this. So you're saying that this is the Minsky moment we've all been waiting for?
I'm saying that the early stages of something like that tend to look like what's happening right now. But there have been a lot of false alarms in the last 10 years. It has seemed like the system was going to blow up several times, beginning with the housing bubble bursting in 2007, 2008, and then after that, there were other signs of distress that popped up every once in a while. And none of them really came to anything because the government was running massive QE programs. We were papering over our problems by creating lots of new currency and dumping it out of the system and lots of new credit via government borrowing. And that allowed the system, that pushed up asset prices, which in turn kept the system growing in a fairly stable way because that was pumping so much money into the hands of at least, the 1% who were spending some of it, and so we had a bit of a wealth effect from rising asset prices. But that wealth effect was due, or those rising asset prices were due to the government, or all the governments of the world, creating huge amounts of new currency and pumping it out into the system. Well, that's changed now. We've got quantitative tightening in the U.S., where the Fed is shrinking its balance sheet by letting its existing bond portfolio run off as the bonds mature. And that's not surprisingly coinciding with rising interest rates. Because as the Fed tightens, they use QE to push down interest rates. So as they do away with QE, it's not a surprise that interest rates start to rise towards more historically normal levels. And that's the kind of thing that eventually, at some point, there's a number on the 10-year Treasury yield that starts destabilizing the financial markets. And the question is, where is that point? Is it 2.8%? Is it 3%? Is it 6%? And that's what we'll find out if we keep on this path without doing something to stop the trend of rising interest rates and increasing debt. And it's not clear what we can do. If they go back to QE again, they're going to be doing it in the context of a market that's already kind of overheated by a lot of measures, where asset prices are at record levels pretty much across the board. If they decide to start buying assets at this level as a way of keeping the economy growing, then you're pushing asset prices up into the stratosphere, into valuation territory that has always and everywhere preceded a gigantic crash. And that's kind of the box they're in right now. If they don't ease, then you've got all these trends that are pointing towards some kind of a collision that leads to a crash. If they do ease, then you get valuations on stocks and bonds that are probably unmanageable on the long term. And it's not clear that there's a middle way. So we'll see what it is they do and what the outcome of it is. But just looking at the numbers, it doesn't look like there's a way out. So 2018 could be a really interesting year, both, for your money personally and in a theoretical sense, because we're doing things that have never been done before. And
yes, we are.
Those things are creating problems that we've never had to deal with before. So fascinating time on every level, Kerry.
Yeah. These are amazing times we're living in, John. So we had this whole Davos get together. Is Davos different than the Bilderbergs? I just don't quite. I thought that maybe Davos is an offshoot of the Bilderbergs. If any of you out there know the answer to that question, please email us, kl@kerrylutz.com. And by the way, email us to get our white paper that John and I put together on cryptocurrencies. And I think you're really going to enjoy it. We put a lot of work into it. And no, it's not going to tell you how to get a digital wallet and how to buy and sell cryptos. You can watch a YouTube and figure that out. You don't need us for that. Rather, we get under the hood and we talk about what is involved in a cryptocurrency. Is it a currency? I call them kind of crypto wannabe currencies, John. But we'd be remiss, John, if we didn't talk about the major decline that hit Bitcoin over the past couple of weeks. It's trading right now in the low 11,000s, and that's pretty major, isn't it?
Well, yeah, I think it touched 20,000 or got very close to it in its run, and then dropped by basically 50%, which, okay, two ways of looking at this. One is that's normal in the parabolic stage of a bull market. You get some serious corrections, but that doesn't necessarily end the bull market. because something has to go to its intrinsic value and then overshoot. That's typically how bull markets work. And we really don't know what the intrinsic value of a cryptocurrency like Bitcoin is. That's something that...
Good question.
We'll know with retrospect. With 2020 hindsight, 10 years from now, we'll be able to say, oh, yeah, here's how you should have done the math back then. But we don't know what the math is right now that tells us what these things are worth. So this is either a screaming buy the dip opportunity or the end of the era of Bitcoin. And it's not clear which is which, because we don't know, first of all, which cryptocurrencies are going to end up being the dominant ones if cryptocurrencies end up being important players in the global financial system going forward. We don't know how the blockchain is going to play out in all the different markets it's being tried out for. I think the most interesting crypto-ish story right now is that they're starting to apply it to gold. Yeah. Sprott.
We know that. We talked to Rick. Yeah.
Yeah, and is it Perth Mint also who's doing it? They're
about Perth doing it, but it wouldn't surprise me.
Yeah, so somebody else is doing it besides Sprott, and the idea will be that the gold stays in a vault somewhere, but the blockchain allows you to transfer ownership of that gold instantaneously anywhere in the world, zero friction. The blockchain ideal. Which is vastly superior to the current way of transferring value, especially with gold and silver, which aren't that portable. You don't carry gold bars across borders anymore.
Not if you know what's good for you.
That guarantees you at a minimum an hour's worth of drilling. Why you doing this? And that limits the value of gold and silver in the marketplace, because the portability of it is a real hassle in today's world. So you can't take it with you when you go somewhere. But if it's part of a blockchain system where you can transfer your gold, in effect, from here to Switzerland with a mouse click, then all of a sudden gold and silver become important kinds of cryptocurrencies, in a sense. They've got a physical reality and a cyber reality. And to that extent, I think the blockchain is a very big deal for precious metals, and we should be paying attention to that, because if gold and silver, once they're transferable in that way, become caught up in the Bitcoin / cryptocurrency mania, you could see spectacular price increases, because those are small markets relative to the world of paper. There are orders of magnitude more paper currencies out there, and credit and financial instruments that are based on fiat currencies than there are precious metals out there. So just a tiny fraction of the investable paper wealth in the world flowing into precious metals, and cryptocurrencies based on precious metals could be a catalyst for that, could send these things to the moon. I did a commercial a while ago where I predict $200 silver, which sounds outrageous in this world, but let those things be part of the cryptocurrency complex, and $200 silver from here is minuscule as a move compared to what some of the cryptocurrencies have done lately.
Oh, for sure. I think it's a game changer for for everything, literally everything in the crypto space. Once there's really a gold-backed crypto coin, I think it changes everything, John. I mean, you could tell me what you think, but the reason why is that currently the only cryptocurrency I know of that really has intrinsic value, and you're going to laugh about it, is a guy that I met at the North American Bitcoin conference, and his cryptocurrency is backed by cellular minutes. Okay, you can laugh at that. I mean, it's kind of entertaining when you think about it, right? But it really, I guess they do have an intrinsic value of some kind, right? Really? Don't they? You think?
Well, yeah, not on my service, because I think I have unlimited.
Yeah, well, if you have unlimited, then it's still worth something, because you would have to pay for minutes if it didn't, right? If it didn't have anything.
Well, see, that's what's so interesting about the concept of the blockchain is you can pretty much use it as a value transfer mechanism for any kind of an underlying asset. And so we're trying to figure out now which assets are good for that kind of thing, which ones aren't, and so we need a decade basically to work this whole thing out, and it's going to be a fascinating decade. You know, as a guy with an economics degree, I'm just blown away by this world. This is so much fun to watch because these are markets at their rawest, most elemental form out there everywhere. You know, we've got creative destruction going on in every aspect of every major society around the world. And so it looks like chaos and turmoil, but it's actually the ecosystem operating as it should. You know, this is how the world should work. A well-designed, fully functioning world that's based on free markets and private property ought to have innovation and new things coming along all the time. And that's what today's world is like. So, you know, we're making a lot of incredibly silly mistakes with debt and with the environment and several other things, geopolitics for sure.
Oh, God.
But in the technology/economy part of the global financial system, it's fascinating. So much wild stuff is happening, and it's right out of economics 101 textbooks, how it should be happening. So this is fun, but the outcome is uncertain. That's another aspect of creative destruction, is that you really can't tell ahead of time exactly how these things are going to play out, because it's something new replacing something old. And that's an inherently hard to predict process, because all you've got is the history of the old thing. You don't have any history with the new thing.
No, you don't.
And the new thing, therefore, is going to do new things, you know. And I don't know. I think the blockchain idea is one of several things. You know, energy is another one, where solar and wind are basically killing coal, you know, and will soon kill oil. You know, that's a great thing to watch, and it's fascinating. And there are actually some societal benefits to that process. Same thing with the blockchain. You know, it could improve the way a lot of things work, but we can't know exactly how it all plays out ahead of time. You know, we just have to kind of watch it, and in a lot of cases from a safe distance.
You know, I've thought about this. You know, we've talked about it so many times, John. Applications for the blockchain. And one of the greatest applications is, I talked about counterfeit aircraft parts, blockchain being able to track the part from the moment it's manufactured, and each time it gets sold along the line to distributors and eventually to end users. What about counterfeit pharmaceuticals? That is a huge problem. It seems like most of them probably come out of China. And what if you're able to track every lot of pharmaceuticals through every step of the supply chain till they get to the drugstore? And then, you know, if somebody's trying to counterfeit the lot number or something like that, or there's unique identifiers that they can't counterfeit, then, you know, if it's not on the blockchain, we aren't buying your drugs. Right?
Yeah. See, that's something you would never think of until you really dig into the implications of this new technology. But yes, that's a big deal. You know, you saw the story about the amount of counterfeit fentanyl they just caught that was on the way from Mexico to the U.S. and it's enough to kill 10 million people.
Yeah.
And it's counterfeit. You know, you don't even know for sure what's in there, but it's just basically heroin cooked down to, you know, a pill form apparently, and branded fentanyl. So that's a use for a blockchain system, and there are 100 more, it sounds like. You know, personally, I like the gold and silver thing as a gold bug, you know, because that makes me lots of money personally. I want to see that happen. But there are a million other things that could happen out there that are beneficial for society from these new technologies that are coming along.
And they're going to happen. That's the thing. They are going to happen, because the blockchain, to boil it down to its simplest iteration, is just a public ledger of every transaction associated with whether it's that currency or gold storage in the Royal Mint of Canada or prescription drugs that are manufactured. And it's not just the bad stuff. It's like every drug is, because drugs are the ultimate branded item, really lend itself to being tracked by the blockchain and controlled in such a way. I mean, this is a major innovation for all counterfeit goods, any counterfeit goods, but the ones that really pose the biggest threat. That's what we're talking about, and that's pretty major here. It's an innovation that really will change your life, because you could have taken counterfeit drugs and not known it. Like your Lipitor that you take, you think, oh, that came from whoever makes Lipitor now. I think it's generic. But all these things really open up the world to the integrity of the blockchain. Like I said, blockchain can be used for good or for evil, but one thing is for sure, the blockchain itself is uncorruptible and immutable. And to know that, what do you need ETFs for then, John? Because you don't really know if all the stuff that they say is in the ETF, whether it's a gold ETF or whether they're owning corporate securities or not. You don't know whether they own it or not. But with the blockchain, you will know that they own it. You will be able to prove it, and then combine that with an external audit several times a year, and you've got the best assurance that you're actually buying what you think you're buying.
Well, now, Kerry, on the flip side of that is that these exchanges are getting hacked all the time. You know, you saw the Japanese exchange that just got hacked for $500 million of Bitcoin that were sucked out of it. You know, and then somebody in Britain this last week was robbed at gunpoint. Somebody broke into an exchange.
I heard, the guy who owned the exchange, and they made him give him like $1 million, or they were going to kill him. Yeah, and he gave it. And so also we got the Puerto Rico example a while ago when their electricity went down for months and the internet didn't work. They couldn't access any of their crypto coins or any other cyber assets. So that can't happen here, John. That can't happen here.
Yeah. But you have to throw all of that stuff into the mix. And it's really not clear how it all plays out because of the incredible benefits weighed against the apparently extreme downsides to these things. And so we have to try it. And we have to get a lot of people involved in it and come up with new ideas and see how it all plays out. But we're really just at the beginning stage of this process. This is the second inning of a 9-inning game, which could go into extra innings. You know, it could be an 18-inning game before we actually find out how all this plays out.
Yeah, and they are trying right now to link up credit cards to cryptocurrencies, which would then really make it a currency because it's hooked into your Visa, MasterCard, Amex card. It's a company doing it, but I don't think at this point Wall Street really wants it to happen.
Well,
so
the
slow adoption.
Yeah, the debit and credit cards based on Bitcoin aren't actually what people say they are. You're not spending Bitcoin when you do that. You're converting your Bitcoin to dollars and then spending it. Right. You know, if you go to Walmart and use that credit card, Walmart didn't take Bitcoin. What they did was they took dollars that you converted your Bitcoin into. So that's not exactly spending Bitcoin yet. You know, you have to have merchants being directly willing to take it before you're actually spending it.
What it does, though, is it makes your Bitcoin or other cryptocurrency directly convertible, instantaneously convertible. But just like you go to Europe and you use your Amex card to buy something in euros, right now, like they say, they don't charge you a fee when they convert, but they don't charge you an obvious fee. The fact is they're making a profit on the foreign currency conversion. That's a major part of banks' business, FX. So they are making the profit. They're just not charging you a flat fee of 2% like they used to. But they're still, I've seen it with PayPal. Send it to people in Canada and look at the actual conversion rate, the spot rate that's on Kitco, and they're giving it a haircut. So what you're saying is they got to make money. Visa and MasterCard are going to make money. The exchanges, those are just exchanges when you get down to it. They call them clearinghouses. But what's a clearinghouse? An exchange. And that's where you go to settle transactions. So I totally agree with you. Well, we'll leave this. Just get the white paper on cryptocurrencies. I think it will clear up a lot of your questions. Hey, if you've been trading cryptocurrencies for 9 years, you probably don't have any questions, but it raises some important issues that you need to think about, like what is money and where does money go? How does it travel? All these things, and then the effect of the blockchain upon it. Anyway,